Good morning. Welcome to the Gimbal Weekly Update. For your safety, I need to share this screen with you real quickly so you are safe. For your safety, you need to know that we do not have crystal balls. Skateboards are risky. This is strictly our opinion. Content provided at this event is for general information only and not intended to provide specific advice or recommendation for any individual. Any performance references historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Any economic forecast set forth during this event may not develop. Believe that? As predicted, and there can be no guarantee that any strategy will be successful. These thoughts and opinions, no strategy will be successful, even includes buy and hold. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL Financial. Securities offered through LPL Financial they are a member of FINRA and SIPC. Investment advice offered through Gimbal Financial, a registered investment advisor and separate, 100% separate from LPL Financial. Welcome, Doug.
Buy, hold, and hope.
Buy,
and hope it all works out.
It is.
Hey, did you just type that thing in about skateboards because I rode my skateboard to work?
Me? Would I ever do that? I don't know, Doug.
I was getting my oil changed at the shop down the road, and I decided I could ride my bike or ride this skateboard, and I thought this would be pretty fun today. Riding a skateboard, it's a great time, but I did have a couple little rocks going between this front wheel and about sent me over the edge. So it was an exciting trip into work today.
Doug, I am trying to get us moved from the little screen down here. You keep talking and I'm going to fiddle with our technology since Amanda's not here to help us. So why don't you tell our friends about Mike Kinghorn Day and what that really is?
Okay. So Mike Kinghorn Day was created, I don't know how many years ago. It was inspired by the man himself, Mike Kinghorn. He used to work with us. And Mike had this observation that there are all these great holidays where families take off a day or two and do a lot of fun things, but August did not have a holiday to celebrate. And so Keith came up with the bright idea of, well, why don't we just have a Mike Kinghorn Day? So we shut the office down and you get to celebrate Mike Kinghorn, and there's no Hallmark card or anything, but you take the day off and you have a good time in the month of August.
Maybe we could get a Hallmark card. Maybe one of our young tech gurus could help us have a Mike Kinghorn card that we could send people and wish them happy Mike Kinghorn Day.
May, June, July, September, a lot of great stuff. October, November, December, great holidays. August, Mike Kinghorn Day.
Thanks, Mike. Thanks. I did, in preparation for today, Doug, I did a Keith's COVID tracker.
Whoa.
Again, those of you who are concerned, this is strictly the opinions of Keith Tyner. This doesn't even necessarily equal Gimbal Financial because Doug hasn't seen this.
I'm impressed that you did some research here and then put your thoughts out there. What's going on?
Well, I see.
Past performance does not equal future results.
Oh yeah. Oh yeah. Oh yeah. Mona Charon used to be an editorial writer. I don't know what she does or if she's alive or what she is, but I saw back early in my career a quote that she had in an article that said, Americans are peculiarly susceptible to the idea that life can be made risk-free.
Right.
And she was talking about health insurance and healthcare reform, but she's basically, the article went on to say that Americans are peculiarly susceptible to the idea, which other countries aren't, that I can build my life so I never die, is kind of what she was saying in that article. And it just stuck in my head as like, the rest of the world lives life knowing that this is the only one we have and it may not last as long as I think, so I better make the most of today. In some places in the world, they're just trying to scavenge for food today. And so what she was saying, Americans have the luxury to worry about longevity. And so I just was thinking about COVID, and I see different ways that data is used in a misleading way. So I thought I'd just create my own data. I read a book, I skimmed a book. Reading it would be a stretch, but I skimmed a book called How to Lie with Statistics. And so I see a lot of stuff out on the internet that just is somebody's opinion. And
that's a pretty cool title. Like that pretty much said, do I need to read it?
No, you basically, you can make statistics say anything you want. And so this is my way of making statistics say what I want, but I'm going to explain the statistics here so you can choose what you want to believe about this. So if you Google 20th century pandemics, you're going to find 3 of them. You're going to find 1918, 1957, and 1968. I just talked to somebody who just told me everybody in his house got the 1968 flu, and it was known as the Hong Kong flu.
Didn't know that.
And the 1957 was known as the Asian flu. And the 1918.
Were these all, these hit worldwide?
Yeah, that's what a pandemic is all around.
So 68, there was the Hong Kong flu in America.
Yeah.
Okay.
And my friend I just got off the phone with,
he wasn't in Hong Kong.
He was in,
okay,
I don't know where he was. Yeah, I should probably know where he was, but I don't. Illinois somewhere. Okay. 1918 was the Spanish flu. So here's what I did. This is the complexity of the math I did. I took the life expectancy in 1917 from data that you could find on mortality tables, and I used health.gov. This was like health.ny.gov. I didn't see that till just now, but so I took the 1917, which is the previous year to 1918's life expectancy. There's a female and a male, and I just averaged the 2 out. So in 1918, at birth, your life expectancy would have been 52 years. The very next year, when the Spanish flu hit, your life expectancy at birth was 39 years. I would not go outside. I would wear a mask. I would get 25 vaccinations. I would do everything. That is a significant event.
That is.
1957, that one I said was the Asian flu. The Wikipedia estimated the deaths between 1 and 4 million. So I just used 2 million as my number because, we know today for sure that 4.5 million deaths have happened from COVID. We absolutely know that. And so then I looked at the 1968 pandemic, which was the Hong Kong flu, and the life expectancy the previous year was 71, dropped down to 70. So far, what I can tell with COVID, the life expectancy of the people here is unchanged. Okay.
Yeah.
So the deaths so far are 4.5 million worldwide.
That's this year, not last year, right?
What's that?
Like 2021. That's so you're.
This is 2019 and 2020. You don't have the
Okay.
2021 yet, I don't think, because of the. I couldn't find that. So this one is 2019 and 2020, but that's as good as I could get. And so anyway, here's the deaths, and these are estimated. Okay, 50 million from Spanish flu. If you go, you're going to find a lot higher estimates, but this was the lower end of the estimates. These other two that said 1 to 4 million. So I just averaged it, and then this is what we're told is the actual number now. Then I took world population here, okay, and divided that death number by the world population, and almost 3% of the world population was affected by Spanish flu, and 0.07% for the the Asian flu, and 0.06% for the Hong Kong flu, and 0.06 for the Asian or the Hong Kong flu there, or the COVID, I mean. And so what it tells me is that the COVID is very similar to the second 2 pandemics. It also suggests to me there's a probability we'll have a couple more pandemics this century. And it also tells me that many of the world leaders today were partying in 1968. The US leaders were probably at Woodstock, and they were not wearing masks, they weren't getting vaccinated, they weren't social distancing, but they've taken a different approach to their point of view since then, but the pure data of this suggests that it is a normal part of life. This isn't changing the world like the Spanish flu did. And also, I think if you look beyond the argument that people are having about vaccinations, I think what you'll find is the three leading causes to death from this thing. One is which is age. The higher you get beyond the life expectancy number there, the higher your probability of this thing being very dangerous for you. Secondly, if you're going to have other comorbidities going on in your life, you're probably higher risk. And then the third one is if you're not exercising, you're at higher risk. And so if you're any of those three, you absolutely need to get the vaccination. I can't speak to anybody that's young, exercising, and don't have any other risk. I can't, none of the data that you're seeing on the internet backs that data at all. It just says it's pulling everybody into one bucket, and that's not what's happening here. We have very clear demographic data. But anyway, I think you guys can smile this weekend. I don't think you have to live at risk concerning yourself with what's going on with health things in the world today. You can if you want.
The life expectancy age that you posted on there, the increase from what, 70 to 79?
Yeah.
Since the late 50s. That's pretty cool.
Yeah, and I might have mentioned this in the past. That's where the highest risk has been with COVID. And so consequently, there wouldn't have been any risk for that subset of people back then. I don't know if you understand. I don't know if you're
picking up what you're putting down.
And so
you're used to Keith's writings in the newsletter. That is one really cool quality is you say stuff without giving too much detail. And so you might need to rewind this. Do you rewind anymore?
You can't go back. Yeah. And so my takeaway from this is medical technology got us to the 79 years. And medical technology might have created a portion of this pandemic compared to the medical technology we had. And so we're being forced to think that medical technology is going to save us, and it might, but it's not going to get you to 100 in general. So
just keep
go for a walk today. Living. Yeah, go for a walk today. Enjoy the woods.
Smile at your neighbor. Talk to your neighbor.
So let's talk about the market. Sorry about that.
We're going to come back to this with this right here.
Yeah. I was curious about what was going on in the market again today, and
what are you going to look first? NASDAQ
I'm just going to give you an update on so we've talked about these lines here: the 21-day moving average, the 50-day moving average, and then the 200-day moving average here. And a few weeks ago when I was updating you, I was telling you how many were below that, and that would have been right here. When this was going on, this little dip right here, we had high percentage of numbers below all their 21, 50, and 200-day. Last week, we had 4,400 below their 21-day. That's this line right here. We had 4,500, I'm rounding, below that line. And then we had 2,900 below this line here. The broader market has picked up. You can see that when we flip over to the S&P 600 here as an example. See how this bottomed out when we were showing those numbers. This represents a broader market. It means S&P 500 is 500 stocks. The broader market, this is several thousand. The bucket of stocks that I look at on this is it's 8970. That's how many stocks are in the list that I'm looking at to get my data from this particular software that's readily available. And so what you've seen is a bigger rally on these stocks than you've seen a rally from that bottom, both on the NASDAQ and S&P and Dow, but you've seen a bigger rally on these on these small cap stocks. So it's telling you maybe this thing is, I think we mentioned that a stock market can correct by going down or maybe going sideways. And this has been quite a sideways movement on these stocks. It's been most of 2021. And then if we go to the NASDAQ, you had a little bit of sideways movement until we came out of that. And we haven't really had any sideways movement out of the S&P 500 here, where it's just been going straight up.
Yeah.
So
Yeah.
that's what's going on from my vantage point. Doug, what do you think?
Well, I saw this. This is on the group Bespoke Investment Group. They're a research publishing company. They do a really nice job with data. And on the S&P 500, you can see it on the chart here, but this was last week's Bespoke report, but they were on pace to close. The S&P 500 was on pace to close at its 52nd record high of the year. Not 56 record of the year. And so, you know, could it keep doing that? Maybe if it doesn't have any more highs throughout the year, it will be the sixth best of all time since at least 1950. And so we've said it before, but the trend is your friend until it's not. And that's something we just want to highlight weekly on here. And so you'll see that on the volume that we track, but also when we look at the VIX, we like to talk about the VIX from time to time. And if you see the VIX start to pop up, then that might be an indication that the S&P 500 isn't going to hit another new high for the foreseeable future.
VIX stands for volatility index. So it's the V for volatility and IX is for index. So just those of you who are new with us, just give you a kind of a picture of what that might be.
While you're looking for this, I on the NASDAQ, which we talked about earlier, this was really interesting to me, is it crossed over 15,000 for the first time last week. And of all the 1,000 point thresholds in the NASDAQ that it's ever crossed over time, the only one that has never traded below after crossing a 1,000 point move was 6,000 back in April of 2017. And so April 2017, the NASDAQ was at 6,000. That blows me away. That stops me in my tracks. And the real exciting piece to that, it's not the government pumping a bunch of money into the system. It's not, hey, what should I spend this money on? It's the innovation. And that really tells the story. I mean, several of these COVID stocks that came out, I don't want to recommend this stock. I just want to tell the story of one in particular. It's an exercise bike. I mean, that was an idea that came out of nowhere. They had auditions for fitness instructors to get on and say, hey, how could we get in this person's living room? And then it just so happened to be accelerating and gaining traction, and then COVID comes along. And so it's those types of things that take an index from 6,000 to 15,000. It's the individual stories. I'm not recommending that stock. I'm just highlighting the story. It's not the government doing this or that. It's the innovator out there that gets the stock market to go up.
Yeah, and I've watched this week a show by Mike Rowe. It's called 6 Degrees with Mike Rowe. And if you need something to watch, good, clean, fun this weekend, I think that was on Hulu. I don't know if you can find it somewhere else. He takes an idea and works it backwards to how the innovation happened. And so the show I was watching last night was showing how semiconductors came to fruition over time. The first one I watched was showing how a cookbook led to the development of some really cool things during the Civil War. And so that's what innovation is it's that somebody is doing something and they're like, this really stinks. So the comedy he was showing was the Civil War soldiers eating just horrible food.
Okay.
And so then when they finally got somebody that knew how to cook, knew how to clean the pans, knew how to get the proper food for them and cook it, they're like, all of a sudden the soldiers are smiling. And then because the soldiers were smiling and they were getting beef that wasn't rancid, then it created demand for the beef industry out of Chicago. And it showed how the beef market in Chicago picked up as a result of the Civil War, which led to other developments, in pretty thought-provoking, but that's really what happens and how our economy grows. It has nothing to do, very little to do with Washington, D.C. Washington, D.C. generally will screw up the progress that we're making as a culture by adding a lot of rules and regulations for which doesn't really protect anybody.
Well, and then the leaders come back. I mean, like JP Morgan, he locked the doors and said, we've got to figure this stuff out during the Depression, wouldn't let people leave. And it was those guys who figured some stuff out. And so you look at the innovators today, like Elon Musk.
Yeah.
How fun would it be to go on a car ride with Elon Musk?
I don't know for sure.
Oh, that'd be awesome.
I don't know.
He's a different kind of guy, but I mean, or hang out with Howard Hughes in his airplane. I mean, it would be unbelievable.
He's a different kind of guy.
These
too.
are brilliant people who
Yeah.
are taking risks, doing interesting things, and that's how stuff gets started. And even in our space, you know, it is really exciting to see what is going on in the future of financial planning and investing. I mean, there are tools out there today that didn't exist 10 years ago. And so that's what's going to make the market do well.
Yeah, and I don't know that, you know,
competition too.
I mean, technology has been a leader, retail developments have been a leader, healthcare has been a leader. These sort of developments take place. I'm going on 2-wheel drive today on my new shoes. My kids taught me how to go 4-wheel drive on these. I don't know if you noticed my new shoes or not.
I did notice these. Now, did you? Now, this is not a stock recommendation either.
4-wheel drive is when you take this little band here and put it around the back. And then you go full out, whatever exercise. That's what the hipsters call 4-wheel drive, in case you didn't know that. But
how in the world did that company come back? I was skateboarding today and I saw a really cool kid. He was heading to Carmel and he was skateboarding too. And he was skateboarding with American flag Crocs on.
Yeah.
So he must have gone 4-wheel drive.
And we are not recommending Crocs. The first time I saw,
definitely not recommending Crocs.
I saw canary yellow ones in Boulder, Colorado, while everybody's sitting around smoking pot in that place. Not me, but I'm just saying it's the wackiest. And I'm like, what in the world is on that person's foot? This has probably been 15
Shout out
years
to
ago.
our client who lives in Boulder. That was for you.
Yeah. I love Boulder, I think. But somebody came up with a spongy shoe, and you can buy a pair today for $2,000 if you want, and they're in style. So who knows what the technology will look like, but I think what you can learn from us on a regular basis, and I just wanted to point this out, that all stocks are speculative. And I just wanted to share one that was a leader last year that people talked about, and
we might be using it right now.
Yeah, and this is historical.
Doesn't mean it's a bad company.
Yep, this is historical data. Today is the 3rd. I'm showing you from 9/2/21 backwards. They came out with something that happened. I'm not seeing it here. Maybe somebody changed. Let me look at my data here. Well, I'm not seeing the earnings on these. Some reason it's not showing. I don't know if that was an earnings announcement here on. Oh, I know why. Because I'm showing you historical. So I think this was an earnings announcement that I think was fairly decent. But this stock dropped 15% this day right here this week. And
what time frame is that? I mean, I remember when that happened here in the office.
It was like Monday. It was Monday.
Was that just this week?
Yeah, that's just this week.
So this is real time.
Yeah.
It did it again.
Yeah, it did it. It did it over.
There
I think
it is.
right here.
Yeah. Okay.
Yeah.
Yeah. Nice.
And so people wanted to talk about this stock, how much money they could make off of it, but you have to buy and you have to sell, because this topped out over here at almost 590, and it dropped this week to below 300. So it's basically dropped in half since October. In 1 year, this thing has dropped in half, and it was a leader. Yeah. And then I want to bring up another stock to show you historical. Again, this is as of yesterday. General Electric. This was the darling stock. I'm going to show you a monthly view of this stock.
Yeah, look at that. That's
it was a darling stock until it wasn't. Right here, right? Yeah, like right. I don't know if I can go back to what year is that? 1990. If I can change this to 2000 here. Yeah, look at this. I mean, this stock went from 1980-ish. I can't even tell what that is. Probably down around $1.50 all the way to 60 from 1980s-ish until it didn't. Yeah. Right. And so if we punch in back to today, it basically has had a pretty consistent trend to that. And so that is a speculative stock, and it hit a low over here in '08. I don't know what this price was right here, but it hit a low there, and then it beat that low just last year, and it employs thousands and thousands of people, but it has not been a good place to invest for the last almost 21 years. And so we're not making recommendations. We're just trying to emphasize the point that all stocks are speculative. And what they did that I thought was really funny, it was right here. They did what's called a reverse stock split. Y'all are probably used to a stock split, like where you get 2 shares for every share that you have. They did a 8-for-1 reverse stock split. So this stock was trading down below $10 or $12 a share, and reverse split it back up. So it's trading over 100. And
it is a respectable stock.
It's got yeah. So there you have it. That is General Electric, and it's doing all right now. I mean, it's not doing it. It has done a lot better than what it's done the last 20 years. So if you have it and you're thinking about what do you do with that stock, call us. We're not going to make a broad recommendation or specific recommendations on the show, but
well,
we're happy
if
to talk
have one
to
like that. Let's just put some data to it.
Yeah.
I mean, it's so emotional with stocks, and I get that way too.
Yeah.
But when you put some data to it, it just helps. It helps you see a different picture.
Yeah. And there's no reason to add unnecessary risk. I'm going to go back and show you. Let's just see this one. Oh, that's not some. I'm going to show you another stock that maybe some of you have owned in the past. This was a utility stock. This is as of the 1st of this month. That choppiness of this stock makes it look really risky to me. If you took the name off of the top of it, I would not touch this with a 10-foot pole because of the ups and downs on it. But when everybody had to have a phone in their house, these guys had a monopoly. Like you had to pay them.
They literally do.
Yeah. Some people rented their actual phone. Could you imagine paying $25 a month to have that like corded phone? And I think my grandmother did until she died. I think when she died and we were like,
still paying $7.
She was paying the month. I'm like, AT&T. So, but if we go back again and I show you a monthly view of this thing, it hasn't done anything since really right here. It was almost $60 a share. It hit down here below 23, hit over here down below 20, or right at 20, and hit a peak here in 2007, for which it's just barely over hit again. And then if we take this and we go back and show you what it looked like at 2000, look at this.
These were the stocks everybody owned. Yeah,
you could buy and hold that, right? Is what you thought, until you couldn't. And that was right at 2000. So if we go back to 2021, this is no longer a utility stock. It's a technology stock because it's competing for your internet, it's competing for your cellular technology, it's competing. And so it's a different kind of company than it was during those years prior to 2000. So it doesn't really matter what company you own. The technological developments we just talked about, whether it was a cook in the Civil War or whether it's somebody figuring out a softer pair of shoes to wear or whatever, those things force companies to stay competitive.
Yeah, thankfully so.
And so maybe something will become outdated.
As long as the innovator is rewarded, there's going to be change.
Yeah.
That's the exciting part.
Tell me this, how are you going to be rewarded this Labor Day weekend, Doug?
We are heading to the lake. Hopefully my sons catch a whole bunch of fish because we're going to have our fish fry.
Nice.
Yeah, bluegill.
Bluegill.
The fillet of the lake.
The fillet. Those are small fillets. You have to get a sharp knife to get those ready to cook.
How about you?
We are going to host Caleb home from college tonight. We're going to dinner tomorrow night. I'm open for recommendations. The pressure's on me to pick the destination. I'm working on that. And then probably just chilling out. It's probably going to be our weekend, just enjoying everybody's presence.
Well, you guys all have a great Labor Day. Thanks for tuning in again today, and we'll see you next week.
Farewell.